Thank you very much, and I wanted to tell that the 15 months ago, we said global oil demand in 2024 would be less than 1 million barrels per day, looking at the data, the Chinese data and other data. And at that time, it was a bit of a discussion between us and some of the other players, thinking that our numbers were too much on the low side. But when it comes to today, when we look at the markets today and the Chinese data, I think that we were completely right. Spot on. The oil demand is weak, less than 1 million barrels per day. And when you look at the prices, despite the strong stimulus in China, plus what is happening in Middle East, and the Libya production basically shut down, we still see the prices about $70, which once again highlights the very fact of the weak oil demand we have expected this year, and we expect a similar demand for 2025 as well.
So I assume here that the Chinese stimulus that's been unleashed wouldn't change a whole lot about this. Can we just talk about the level of oil prices? Because it seems recently Saudi Arabia, the top producer in the world, has pretty much abandoned its unofficial crude target of $100 per barrel here. It's seemingly more accepting of a lower oil price environment, which may or may not lead to break even here. Also, they prepare to increase production in December. Is this the new level that we have to get used to?
I think it is, of course, up to the Saudi government to decide what kind of oil production policy they are going to follow. But when I look at the markets today, about 1 million barrels per day of demand growth, which is modest compared to previous year, as IEA has expected. Second, a lot of oil coming from the, as we call them, the American Quartet, the United States, Canada, Brazil, and Guyana. Only from these four countries, the production growth is higher or the same as the global oil demand growth. So therefore, one has all the reasons under normal conditions to expect that the prices will be under pressure.
How much more downside are you expecting based on the outcome of the U.S. elections in November? Obviously, the one candidate, the former President Donald Trump, he wants to ramp up drilling. How much of a discount would that add to the current price?
Of course, I don't want to be part of the discussion of the U.S. elections, but I can tell you that in the last few years, U.S. both oil and natural gas production increased significantly, became one of the cornerstones of the global hydrocarbon sector, and I expect U.S. LNG, liquefied natural gas exports, will be more and more dominating the international gas trade in the next years to come, whoever is the President of the United States after 5th of November.